week today on Friday, June the 9th, to close out the week. I was happy to get out of the market today at these levels because it was a tough market environment, tough chart patterns, not a lot of work today. Minus 1525 on the 250K portfolio, minus 315 on the 50K portfolio. And here's where we are on the week, minus 4,000 on the week, up on the month, up on the quarter, on the year. And we are in this drawdown, and it's right about 9% drawdown, almost a 9% drawdown. Since last equity peak was May the 5th, so we're $22,000 away from our highs on May the 5th. And so just a choppy, toppy market pattern, very volatile for a bull market. Don't usually see such choppy bull markets constant sell-offs and rallies. Unusual market patterns, and not a lot of strategies traded today. The one strategy that was most profitable was tick count trend 2, and you can see had a nice short trade here, came back shorted, exited here. This one was stopped out, and this is a typical afternoon short trade that never works in recent market activity. And so, but it was up 1,000 today, so it was a highlight. Tick count trend dynamic turnaround. You can see this strategy here. And I was working with these indicators. You have a trade station, and you're not seeing the plots. One thing I did was come in here and clicked on this. Don't automatically connect plots. And so I'll say yes. Okay. And then you can see that number at the end instead of 0. So minus 212.50 on tick count trend dynamic turnaround. And opening chop was minus 400 on the day. And so just 3 strategies traded. So when we talk about we are 1 for 3, we're not talking about the number of trades. There's obviously 1, 2, 3, 4, 5, 6 trades. And the trades were 2 for 6. But the strategies were 1 for 3. So overall, we were net profitable on the S&P with tick count trend showing plus 1,000, and then tick count trend dynamic turnaround minus 212.50, minus 400 on opening chop. And so we'll go over the market in a minute. Going over the trades first today. Look at the Nasdaq. It was only 3 strategies traded on the Nasdaq, or 4 strategies. We were 1 for 4 on the Nasdaq, and so the highlight of the day on the Nasdaq was Zig Zag. We had 3 winners, 3 out of 4 today on Zig Zag. This one struggled recently. And then we had Viper, 1 for 2, and Tick Reversal, 0 for 2. Just as typical, you see a lot of short trades end up like this. The market just won't go down any day. Determined to create victory every day on the bullish side, on the bullish camp. And we should see, it'll be an interesting week next week. I'll talk more about that in a minute. Robot was a loser today. We're okay. We're used to having long losing streaks in Robot. And you just see, here's this toppy, contentious pattern that we're seeing. We had this last Robot trade that was a winner, was a nice winner here. This is one of those strategies that can have big winners, and it can have small losers because we have a $400 stop loss. And so you can see gap ups aren't working too well most of the time. You got rejected here, rejected here, rejected here, rejected here, rejected here. Really a contentious topping pattern. And I thought the market, after 4 times it was rejected, I thought it would sell off on Wednesday and maybe continue down into the weekend as we have a Fed meeting next week and CPI. But the market grew legs and rallied again. It propped up yesterday, and so these long trades off the lows, off of a sell-off, are pretty profitable. But long trades off of gap ups have struggled because we're just hitting this point right here. And so I guess we either have to break through this somehow. It's just such a choppy uptrend, and it's more like when it's this choppy, it's usually more of a bear market. We've talked in the past how don't short a dull market. It's not that dull. It's not as dull as it's been in the past. It's not as volatile as it's been in the past either, but pretty choppy in my opinion for this kind of price action. To sit up here at these highs for this long and trade like this is more of a topping pattern, but the liquidity really just wants to support it. They just really want to drive up prices. and so you continue to see that. And so Robot was down on the day, and so the Nasdaq was 1 for 4 with Zig Zag stepping up, doing well today. Tick count trend. Our counter trend strategies did well today. Our breakaway patterns didn't do as well. Viper has 1 for 2, but it's still down on the day. Tried to short it here, and it was impossible to short it after 12. We've talked earlier in the week about buying at 11 o'clock. Had you bought at 11 o'clock, you would be down on the day. Down on the day if you bought at 11. And so let's look at the market overall on the intraday chart. VIX up a little bit on the day as the market is up on the day. And so we continue to see, we see down, VIX is down, market's down, VIX is up, market is up. Kind of weird. These are, small incremental amounts, and the VIX is at a very low level. And so when it goes from 1365 to 1383, it's hard to create any sort of significance and say, oh, the VIX was up today, that's bearish. It's such a small amount at such a low level. And so one of the interesting things about the market is we had some profits going here, and then, the market just hard reversal, but it came back to this point and it did not take out the lows, and it stopped out a robot right there and then reversed, and it was like, it's always frustrating. So, psychologically, I was glad when the market rolled over some more. I hate being stopped out the lows. I don't mind being absolutely wrong, but I don't like being exactly wrong. Absolutely means that if you were stopped out, it keeps going down, and you would have ended up down on the day anyway. But exactly wrong is when you're, stopped out the lows and it reverses on you. So the market bounced, and the bounces were narrower and narrower and narrower, and it got here. It finally hit the previous day's close. I was surprised it didn't take out the lows here or fill the gap here, but then it finally did in such a choppy fashion. And then it finally hit the previous day's close, and then it rallied, and then it sold off again. There's so many days when this market should probably sell off, and it doesn't. Most markets, historically, you see, certain dynamics and patterns lead to, a little more selling. It's not the end of a bull market if you have a fast sell-off on a trade like this, on a day like this. But it's just interesting. This market just continues to be the jolly bullish chorus steps in and just drives it up. And so, the ticks. What's interesting is the market internals are lower. Market internals are lower on the day. Minus 740 on the advanced decline line. The ticks, here's a zero line, didn't really go anywhere, and so it started getting carried away. Nasdaq up 65 points. The ticks didn't really, the high on the tick was 724, while the low was minus 1,032. And let's take a look at the S&P. So I added the chart. S&P up 0.23% on the day. Russell down. Seems to be an alternation between the Russell and S&P and Nasdaq. I have an open code strategy I want to show you that I tested for the Russell and the Nasdaq, and I'm going to show that to you now. In this strategy, we are just plotting at RTY.D 5 minute. For data 1, data 2 is at NQ.D 5 minute. And here is the easy language code. And if EL date is greater than 1/1/2021, it doesn't work prior to 2021. So I put that on there, even though there's more data. Sometimes you might have a strategy that requires more data, but you don't want to test it. You just want to see what it's done since a certain time period to see what the average trade profit is. And so the data is not equal to data 1, and open is greater than the close of 1. So the data 1, your open is greater than yesterday's close, and the close of data 2 is greater than the open, less than the open of data 2. So you're basically saying your opening is up on the day, and then your close, you're open for data 2. The Nasdaq is down and the Russell is up. Then you buy next bar at the market. Stop loss of 2,000. Set exit on close. Very simple strategy. Here is the performance report for this strategy for the Russell 2000. And it's interesting. It's very interesting. It says ES. I may have a, here it is on the Russell. Sometimes you have to hit this refresh button if it's looking at another strategy. And so here's the Russell. It doesn't take a lot of trades. And we go 6/8/2020, but we're only testing back to 2021. And so $23,690, $39.85 drawdown, $299 average trade profit, 60% profitable. Here's the equity curve. And so after 5 minutes of trading, the open of the Russell was greater than yesterday's close, and the close of the Nasdaq, open of the Nasdaq was less than yesterday's close. Then you buy the Russell. So basically they're moving in opposite directions. And so you see that rotational price action. This could be tested between different sectors and equities as well. If you want to use this, I'm just putting that out there. You'll need to change it to automate. Obviously, you need to use a different front month contract. And speaking of which, we have rollover as well. So at RTY M23.D or at RTY M23 with the custom session, and at NQ M23.D or at NQ M23 with a custom session would be the symbols to automate. Also, we're rolling over, so that M would change to H. And so we'll go over rollovers in a minute. But that is what we're going to take a look at on this strategy setup on Friday. So here is another look at the Nasdaq, and you can just see how choppy this is. Multiple topping patterns. See this come back, had to take out those highs. You continue to see this. Let's go get those highs from at any point. And so it took out the highs here, almost took out the highs there. We talked about this in yesterday's video. Could see it taking out the highs. It didn't take out these highs, I don't think, but it took out these highs. And so just continues to be very choppy, and we'll see what happens next. Next week, a lot of longer video than normal. We got a lot. We have CPI on Tuesday, and then the Fed meeting on Wednesday. We don't trade. We're not trading on Wednesday. So the FOMC meeting, you can trade if you want, but we don't trade on FOMC. Just turn off your strategies, catch up on your errands or whatever you do. Take the day off, doctor's appointments, whatever, and come back and watch the market during FOMC at 2 p.m. Eastern Standard Time instead of trading it. And so we found that to be more profitable. We may have some FOMC strategies that I'm working on, and it's possible I could do an audible between now and Wednesday and say, hey, here's one strategy you could trade on FOMC. But also rollover for Monday. They used to be on Thursdays, and so I'm kind of glad. It looks like they've moved that rollover to, I don't know who they is that moves rollovers from Thursdays to Mondays, exchange driven, but Monday is the looks like the rollover day. I'll send out a rollover alert, but you should see if you look at the at NQ or at ES, that you should see that pending data show up. A yellow PD will show up. You'll need to refresh all the charts, and so Monday is rollover, Tuesday is CPI, FOMC on Wednesday, and that's it for today's report. Let's go over the trades once again for Friday, June 9th, 2023, and looking forward to next week's trades and working out of this draw. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.